What's up, everybody out there? It has been quite some time since I made a video. I was really busy with doing a 3-year backtesting strategy that I do believe I talked about on my last video. Really good news though about that is it is all done after like 6 to 7 months worth of working on it, and I have been trading it the last about a month now, and it has been working out. I'm definitely up a significant amount from option trading, and as a result I'm celebrating with those profits. Bought myself a nice bottle here of whiskey, scotch to be a little more precise. This is Laphroaig Scotch. It is an aged 10 years bottle. This is one of the lower tiers for that brand, but it is still pretty good. Definitely not the best scotch I've had in that price class though, but still not bad. I would probably expect more from their higher tiered brands. There is a bottle that they sell that actually comes with a small deed for a small plot of land that's on their property. So I would expect something like really good scotch to come out of that bottle. But this one, it's so-so, and that's what I expect out of it. Nevertheless, I've been drinking it for a while now. It's almost gone, and that is what I'm choosing to celebrate with tonight with you all here. So for you all, cheers. I think personally this goes best with just one ice cube. Add a little bit of water to it, kind of brings out some flavor. I know that's really touchy though in the whiskey drinkers world. Either way, I'm not here to talk about whiskey and talk with you all about whiskey. We're here to talk about where is the stock market and what I'm doing and where I'm at with it. So let's get into that after I finish this. Now that's finished, let's get back into the stocks. So, let me start with recapping from the last video, which I know was a long time ago, so it's probably a good spot to start to kind of catch up. I had left that last video saying I was going to be fully invested in some index fund like the SPY, which I did, and since that last video everything kind of continued grinding higher, and right now we're at all-time highs, so that ended up being a pretty good move to do. I also was in the DFEN triple 3x leveraged ETF. Since then, and mostly since just the election, that ETF has gone up about 30% for me so far, and I'm still holding it. It's still rising, so that has worked out for me as well. And everything basically did work out as I had planned. Since that last video, I was expecting things to kind of go mostly flat until around October. We'd see some volatility. All of that happened, and then right after the election we'd see a strong rally, which is exactly what happened. So yeah, the whole plan I had made many months ago worked out just about perfectly. The one change I actually didn't get to make a video for was actually right before October. I did actually lessen my portfolio. I put about 20% of it in cash, getting ready for that volatility that I was expecting in October. So I had some cash during that period. That's really the only change that I never made a video for. And that leads us to where we're at right now. So getting into where we're at right now and what I'm doing before I talk about that, it's my favorite part of these videos. Just to make sure that everyone knows this isn't sort of financial advice. This isn't meant to serve as investment advice. The true financial advice and investment advice takes into account things like your age and your income, what kind of goals you have, and how much those goals will cost. I, of course, know nothing about that for the people watching these videos, so I can't give you real financial advice. I can only tell you what I'm doing, what I see in the market, and why I'm doing it, that type of stuff. Of course, though, I do strongly encourage every person to seek out financial advice. It gives you a good foundation to make all your future plans on, and kind of overall just start thinking about money. One of my old bosses really kind of said, anyone that spends their life thinking about money is destined to at least have some. So if you want money in your future, at least spend some time thinking about it. Right from there, it'll kind of work itself out. Anyway, so that's our disclaimer. Let's get into where we are at in the stock market right now. And where that is, to me, is extremely bullish. Extremely. So like I was saying in all my last videos, the election was supposed to serve as a strong catalyst, and it has. A lot of investors and businesses wait to see who the president is going to be for the next 4 years before they put their money to work. So now that we know who the president is, or at least it's fairly certain, there's still a little bit to sort out there. But now we have a good idea who it's going to be. A lot of money is getting put to work, and investments are getting put in, and the stock market is rising very fast. So, presidential election, huge catalyst. Of course, 0% interest rates from the Fed, which are not going anywhere, as the Fed has just mentioned a few days ago, actually, on Wednesday. They are an extremely dovish Fed, meaning they don't want to raise interest rates, they don't want to lower how much bonds they're purchasing, they want to help in any way, shape, or form possible. And for the economy, and for the stock market valuations, the price that we all have to care about, that is extremely bullish. And on top of that, the vaccine is approved by the FDA. The second one is in line to be approved probably in a couple of days, maybe a couple of weeks, and I think there's several more behind that as well. So vaccines are coming. Some treatments have already been approved as well, and more treatments are in the pipeline to get approved. So COVID is getting fought very strongly. So COVID is the only thing really keeping this market down. It is about to get removed in the next 6 to 12 months from the whole equation, from the factors there. So, extremely bullish. And then last, we still have some stimulus, or as they're calling it, not stimulus, we still have some bills in relief. They're calling it COVID relief funds. They have some COVID relief funds that are supposed to get released around next week, and as of late, that's changed from a large bill to possibly a two-part bill, so we may see a second part coming out as well. And then, so again, stimulus from the government, extremely bullish. And finally, last, for why I'm so extremely bullish on the stock market right now, is actually my favorite, so save the best for last. It is called Dow Theory. Now, Dow Theory was made by a columnist of sorts from the Wall Street Journal many years ago. He studied this over, I think it was like 12 or so columns that he made, and overall the simplified version of Dow Theory says that when the Dow index, or an index like the SP500, and something like the transports are at all-time highs, they will continue to reach all-time highs. Now the main basis behind this is that if you see that the businesses are working, firing all cylinders, which is represented by the S&P 500 being at all-time highs, and also the transports are firing at all cylinders, which is represented by the Dow Jones transports sector being at all-time highs, it's kind of telling you that whatever is causing these prices to be so high is a real deal sort of bullish scenario. The main reason being that all goods, whether raw or finished, need to be transported. So if business is booming for the businesses that are represented in the S&P 500, then business has to be booming for the transportation companies as well, because those transportation companies need to move all those raw goods to the companies to do their thing and then ship the finished goods back, and all that is business for the transport companies. So if they're both not in unison, rising to new all-time highs, there is something fishy, and this is what this columnist, I think it was Charles Dow, had said in his columns. Of course, naturally, when someone says that when this happens, this will happen, and I'm sure of it, there is no shortage of people out there willing to call bullshit on that sort of thing, so people have tested this Dow Theory out a lot. And it typically tests really strongly, somewhere in the high 90%. So every time we do see this, it does typically mean stocks will go up. And on the reverse side, if the S&P 500 and the Dow Jones Transports are both at 52 weeks lows, it typically means stocks will continue down from that point. So right now we also see the bullish scenario, and it typically tests correctly We have all of these fundamentals that I just mentioned, also leaning towards a bullish scenario. So all together, I think people should be leveraged in their portfolios at this point, or at least myself, I'm leveraged in my portfolios at this point. So really take advantage of this gain. And and of course we have the chart to look at too. So I'll throw up the chart. There's only one major thing to look at here, and it's basically the resistance right here before the election happened. Then post-election, we shot straight up, blew right past that resistance, and then Dow Theory hit right here. That's when the signal happened, and we should be going up from that point going forward. Yeah. So overall, that is basically everything I have for this video. Of course, really good to be back, having some time to actually make some videos. Hopefully that sort of thing continues. And really great to be, trading and making some good money. I hope that's happening to you all there at home as well for your short-term trading as well as your long-term investment portfolios. Anyway, that's everything I have for you all. So everyone stay safe out there, and as always, happy trading.